Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's the mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.
All right, so welcome to Mortgage Mom Radio. I'm Debbie Marcoux. I am the Mortgage Mom. And today we're going to be talking about the market volatility. I know that many of you have, 401k accounts. You might have money in particular stocks, Bitcoin, and you are seeing things that are just flying all over the place. 1 minute we are down 2,000 points in the stock market last week. And all of a sudden today we are up almost 3,000 points in the stock market. And mortgage interest rates are moving around just like that, exactly the same way as the stock market is moving around. So we're going to talk about that. Last Friday was the very best market that we've had as far as interest rates are concerned since October of 2024. And truly the best interest rates we've seen even well beyond October. So October, we had one very quick dip. And then we had, pretty much some stability that was, quite a ways up from where that dip was. Then we saw things start to come down gradually and they were starting to kind of level out a little bit. And then all of a sudden we got that really fast dip again this past Friday. And now we are right back up again. So I want to talk about that today. I want to talk about the clients that we've been able to help. How did we help them? How did we make sure that we got them locked in at the right time? And what steps should you be taking if you are looking to do a refinance, a home purchase, whether you just want to lower your interest rate and your monthly payment? There are many of you out there that have interest rates that are up in the 7% range. Some of you even above that, even into the 8% range over the last couple of years. So we want to try to get those interest rates down, not necessarily because you need to pull out money. There are many of you that do have mortgages and you have home equity lines of credit, or you've got quite a bit of debt that you would like to get paid off. Maybe there is a project that you've been wanting to do to the home, building a pool or doing, renovations in general. And you want to try to take advantage of these dips in the mortgage interest rates. So we are going to talk about that. That is what today's show is going to be all about. So I do want to remind everybody, this is interactive. You guys are more than welcome to put your questions into the feed. Tell me hi, give me a thumbs up, but ask those questions. When you ask those questions, it helps everybody that is watching the show to get the information that they need. So please do not hesitate to do that. I want to make sure that you guys get the information that you are looking for. How do you guys reach me? So you're listening to me, you're watching me do this show, and you want to get something started. How do you get a hold of me? So number one, you guys can always call my office. The number is 844-935-3634. That's 844 We Lend for You, WELEND, and the number 4. You can send me an email. So if you go to my website, go to mortgagemomradio.com. There is a contact us button. And if you send me a message, it is coming directly to me. So I will answer that message for you. You guys are welcome to send me a text message. So you can text that same phone number, that 844 number. My direct office number is 661-349-8300. You can text that number as well. So you guys have all of the direct information and communication links to me. So I do want to make sure that I get you guys the information that you're looking for. All right, so let's get to it. So what exactly happened? Well, we all know that we've been in this tariff battle, right? Everybody's been so consumed with the new word tariffs. Regardless of whether or not you believe in them, you think that they're good, you think that they are bad. because of the instability and the volatility that it is creating in the market, where investors just aren't sure what it is going to do. So last week on Friday, when those tariffs, were basically put into place, the market did not, they did not react well to that news. They did not react well to that happening. So what happened is that many investors pulled money out of more volatile stocks, things where their money is more aggressive, and they put them into mortgage-backed securities. So when we see people buying mortgage-backed securities, there is an appetite for those, those notes. And what that does is that brings our interest rates down. So when the stock market does not do well, we will typically see mortgage interest rates improve. So this is what happened last week. Now, let me explain to you exactly what happened as well. So we have a list of clients that we work with who we have talked with. I've done shows on this before, and I've said, play around with my calculator, figure out where that number is. Where is that interest rate that is, enough of a savings for you that it is worth it to move forward with a refinance? Where is that interest rate that you need to be at to be able to get things done that you want to get done? So we have this list of clients that, both Heather and I and Manny are all trying to dial as fast as we can. So come Thursday, things were looking good. Friday is when everything really came tumbling down, and we saw some really great rate improvements. However, we were also very aware that we had hit a resistance level. So the 10-year note has been well above 4%. It's been well above 4.20 for quite some time. 4.20 was truly that resistance level of that 10-year note. So we knew that for mortgage interest rates, we needed to break below that 4.20 mark. We need to get to 4, and then we needed to get lower than that. So we have been watching that. That has been our resistance level. Now on Friday, Thursday rates were looking a little bit better. We were hitting that resistance level, but we weren't breaking through it. On Friday, we finally broke through that resistance level and we hit 3.8. So that was huge. So we've got this list of all these clients that want to do something, that have said, hey, when interest rates, fall, let me know and I'll get things started. So we are moving as fast as we possibly can. There were not enough hands to input loan applications, call people and explain to them what their savings would be, get those clients that had never applied with us before to do the application, get an interest rate locked in. There just wasn't time to do that for all of the people that we wanted to get to. Now, let me tell you that I also had 3 clients that were in my pipeline who listened to me a month and a half ago. And I said, if you're looking to do something, and we talked about the interest rate, one client in particular, 6.5% was her number. She had to be at 6% or 6.5%. Conventional loans have a little bit higher interest rate than an FHA or a VA, a government loan. So she was a conventional 30-year fixed rate. She needed to have that 6.5% for the transaction to make sense for her. But she did her application like I told her to. She got all of her paperwork into me like I told her to. We got the loan fully underwritten, totally approved. Every document came back that we needed from her. The file was done, and we were waiting very, very patiently for the interest rate to get where it needed to be. The minute that we saw what happened on Friday, we saw the break below the 420 level, the break below the 4% level. I called her up and I said, we hit your 6.5%. Do you want to lock this in right now? We talked about the volatility of the market. We talked about the fact that from the time that we hit that 380, that within an hour and a half, we had already lost about 40 basis points in the market. So we hit a new resistance level, and we started to push up from that resistance level, even within an hour and a half of rate sheets coming out. And I told her, when we see this, it means that we are fighting the resistance. We are most likely at the lowest level that we are going to see, probably for at least another 3 to 4 weeks. Do you want me to lock in this interest rate? She said yes, got her locked. We locked her in. Her CD went out. Today is Wednesday. So we talked on Friday. We locked her in. We had Monday, Tuesday, and Wednesday. Her CD went out yesterday. Her loan is cleared to close today, and her loan documents will go out tomorrow. And she will be closed well before the 15th of the month. So when you get it all done and the file is in my system and I can call you, you are my first priority. You are my very first phone call, not the guy on the list. Now, I love all you guys on my list, and I'm going to get to you as fast as I can. I actually reached out and locked in people in the pipeline. Like I said, I had 3 of those where there was a particular number that they had to get to for the transaction to make sense. We got them all locked in. Then we started making calls to the people that were handwritten on the list of who we needed to get in touch with that wanted to lower the rate. We were only able to get in 2 more applications that way. We've got 4 more people right now that did miss out. We couldn't get the application in fast enough. We couldn't get them on the phone to talk to them while they were busy at work. We couldn't, whatever the reason was, we couldn't get it done. So if you are one of those people that there's a number that you need to get to, we're not quite there yet, but you'd really like to have it. I am telling you that the market is volatile right now. You just watched the stock market and Bitcoin dump and pump. Mortgage interest rates do exactly the same thing that they do. We're just usually on the reverse opposite end. When one is pumping, we are not, and vice versa. We are in that market right now. So we need to get you in. We need to make it so that it is easy for me or for Heather or for Manny to be able to quickly log in and hit a lock button so that you take advantage of the very best timing and the very best interest rate before another 3 to 4 or 5 weeks of, where that interest rate is not possible any longer. Okay, I can see that I believe it's SV Day. I think I said that right. Hi, Debbie. Do you foresee the mortgage rates dropping more and more this year? Just looking for some insight. So it's going to be, that's a great question. And I do think that we are on the downward escalator. So I'm going to explain that. It doesn't mean that we're going to see interest rates lower and lower and lower and lower day by day by day. That is not happening. What we are seeing is lower highs and lower lows. So we are still bouncing around quite a bit. Interest rates today are not as good as they were back in October of 2024. We have not yet hit that lowest level that we received in October of 2024 since that time. Now, we came super, super close this past Friday to hitting those October levels, but we didn't quite get as low as we were at that point in time. But we also have not, between October and today, we have not gone as high as we were prior to October of 2024. So in 2022, interest rates started to go crazy. We spoke with a lot of clients. Interest rates were at 4 3/4, 5%, 5.5%. We were trying to explain to them, lock this in now before things get worse. Nobody believed us. We had clients that were telling us, well, I'm just going to wait for rates to come down to 3%. And, I'll just wait until that happens. I mean, it'll happen next year. And we tried to tell them it's not going to happen. It's not going to happen. We'll be lucky if we ever see 3% interest rates again. And those people that didn't take advantage at that time have literally been waiting since 2022 to be able to get things done. So we're seeing lower highs. So we're not getting quite as high as where we were. Our highest interest rates. And I'm obviously in studio. I don't have, documents in front of me. But from memory, I would say that our highest interest rates that we've had were about July through October of 23. I would say those were probably the highest interest rates that we have seen, that we've had. From there, we now have been on the lower highs and lower lows. So we are bouncing around. If there is something that you need to do, that you need to get done, get it done. Are we over time into 2026, between now and the end of 25 and into 2026? Should we be seeing reduced interest rates? Yes. Is it going to happen overnight? No. It's going to be very, very slow, and it's going to move and bounce dramatically. So to give you all an example, the interest rate of 6.5% that I talked about, that I locked my client in on Friday, that interest rate today, if I was locking her in today, same exact file, would be at 6.875. So we lost 0.375% in the last 3 days. By Monday, she would have been 6.625. Yesterday, 6.75. Today, 6.875. We bounce and we move very, very quickly. When we come down, when interest rates start getting better, trust me, we never move as fast as we do when they go up. They always go up faster than what they come down. So are we on the downward trend? Yes, we are. We have been on the downward trend since the end of 2023. All of last year, 2024, downward trend. Is it substantially less over the last year and a half, almost 2 years? I would say yes. So again, July of 2023, I would say we're most likely our highest interest rates we've had just here in studio. We are April the 9th. So we are, not far off of July, which would make us 2 years. And at that time, that same client, that same file, that same conventional loan would have been at an interest rate that was around 8%, 8.25, 8.125, maybe 7.875. So to even be talking that we're in the sixes right now is phenomenal, but you can see that it's taken that long for those interest rates to come down. So we need to make sure that we are hitting that button and we are locking in that interest rate at the best possible timing that we can try to have. And the way to do that is to already have the application in and ready to go. That way, there is no fumbling around. We're trying to call people as fast as we can. You're at work, we miss you, and you miss that dip. So if you have been thinking about trying to get something done with a refinance specifically, then make sure that you give us a call. Go to the website, put in your application. There is absolutely nothing that is automated by you completing an application. You do not have your credit report pulled. You do not get an automated decision of you are approved or you are not. It is simply getting the details and the information over to me and my team so that we can reach out to you, we can talk to you, and we can help you. So that is one way if you'd like to get things started without even having to pick up the phone and talk to me. Go to mortgagemomradio.com, fill out the application. We are going to talk to you. We are going to call you. We are going to review all of your options, determine what that interest rate is that you are wanting. If you are looking for an interest rate that is well out of means of where we believe that we can get to within the next 30 to 45 days, we are not going to start the application. We are not going to put you in the system. We are not going to submit you to an underwriter. We are not going to get your loan moving in any direction. We're not going to open escrow, nothing. That's too far out. Everything that you would give us would no longer be, it would no longer be fresh. It would no longer work for the application. We would just have to continue to update all of those documents as we're just sitting there in the pipeline treading water. Now, if you tell me that there's a particular rate you want, and I can truly foresee that we have the opportunity to hit that interest rate within the next 30 to 45 days, then we're going to get things started so that you can be like my client that I locked in on Friday, who is already clear to close, and we are drawing loan documents tomorrow to get her finished up. So we are going to talk with you. We are going to work with you. So mortgagemomradio.com. Feel free to go to the website. Feel free to put in your application. Feel free to just send me an email if you'd like to talk to me. I really like to do Google Meet calls. I really enjoy doing that with people. I hope that you would want to do that with me as well. I want you to see what I see. I want you to answer your questions. I want to run the numbers with you, and I want to be able to share with you. So Google Meets are really, really nice. You can hit that appointment button on the website and actually set up a time for a call from me. I will call you at that time. And then if you would like to jump on the Google Meet, I will send you over the link and you can join me then that way. And we're going to go through and I'm going to show you and we're going to talk about whether this makes sense or this doesn't. And should we move forward? So again, please, the website is awesome for you guys. mortgagemomradio.com. Don't forget the radio. Click the appointment button or click the submit the application button or contact me button. Send me a message or call my office. So 844-935-3776. 3634. Again, there are so many of you that have interest rates that are in the 7%, 8%. We are coming down now. We are in the sixes, which is great. For conventional and for FHA and VA loans, we are actually in the very low sixes and we're into the fives. I mean, we just locked in a VA loan at 5.75. We locked in an FHA at 5.625. This was last Friday. So as of today, we are now back from 5.625, same exact client that got locked in. We would be quoting that out today at right about 6%. So again, we just want to be able to hit that button at the right time. And without an application, we don't have enough time in a day with as fast and as volatile as the market is to be able to call you, get you to do the application, download it, review it, get it locked in. We can't do that for too many people. We can do that maybe one or two of those in a day. So get it going. Call me now. Get started now. Let's get you set up. Let's get you ready. And even if it's something that looks like it's too far out, we're going to talk about that. But now I've already got an application that's just sitting. I haven't started it. I haven't submitted it. We haven't opened escrow. We haven't gone to an underwriter. And I may not have even collected your documents. But I have an application in my system that I can make active at any time. So, again, take advantage of that. We also want to make sure that you're not doing a refinance for no reason. We want to make sure that you're not doing a refinance that is going to cost you a ton of money. You are going to see like absurdly low interest rates quoted right now. And those rate quotes are with points. Interest, they're doing buy downs and they're trying to get you excited about the interest rate, and you don't realize that you're paying a bunch of points, extra money that is not needed for that interest rate. If we could just be patient and watch for it to come down and then lock it in at the correct timing. So we want to make sure that we are not somebody's not charging you too much, that the refinance is making sense. So the savings that you are getting out of the refinance is enough for you to move forward. Because if interest rates aren't low enough yet for you to save enough, then again, it doesn't make sense. So I would love it if you guys would go to the website, book an appointment with me, jump on a Google Meet with me. Let's talk face to face. Let's go over what you've got going on. Let's figure out what that interest rate is that you need for the deal to make sense. And then, let's decide if we're going to put it together and get it started or if we're going to wait a bit. Annette did say we have a 5% interest rate and want to sell and buy a new home. Is this a good idea? So Annette, you are actually approaching a good place. There's going to be a ton of people like you. And so this is a great question. I love it because for the last 3 years, there have been so many people on the fence about purchasing a new property, not wanting to sell their home and move. Because even if, let's say, normal life, kids are all, grown and they've gone off to college or they've gotten married and they just don't need this big house anymore and they've retired. So let's get rid of the house. Let's downsize the property. Even those people have been just sitting and waiting on hold, not doing anything, because if they sell the home that they're in and they go and they get another property, their monthly payment is going to be higher because their interest rate is going to be higher. Right now, we are getting to that level where those interest rates are starting to make that change, to make that move make sense. So your current interest rate on your home is at 5%. If we could get you into an interest rate around 6%, we're really not changing that mortgage payment all that dramatically. If you're selling one home and you're taking the equity and putting it into the next and you're buying down or you're buying up, whatever your situation may be, the money that you're paying, the interest that you're paying on the money and the monthly payment is not nearly as drastic as what it was when we were talking about a 5% interest rate to a 7.75% interest rate, like what we were dealing with in 2023 and 2024, most of 2024. So again, if that is something that you've been considering doing, it would be a good opportunity or a good timing for you to reach out to us, get that consult. Let's talk. Let's go through what your payments are that you're comfortable with. What is your payment today? What is your house worth? Where are you wanting to move? What are you going to spend at the new property for what you want? And let's talk numbers and see if you're in a position now. Also, keep in mind that where interest rates are today, just like Esvedi asked me earlier in the show, I hope I'm saying that right, Esvide. I think it is Esvide. But just like she asked me earlier in the show, we are on the downward escalator. So if you get into an interest rate today that's around 6.25% or 6.5% or 6%, depending on the loan type, in a year from now, in another 12 months, we're probably refinancing you into those mid fives. So now is a much better opportunity than it was 3 or 4 years ago, which is why there were so many people that were on the fence, that put their home buying goals on hold, put their home sale goals on hold. So yes, I would say it's a great time for you to be looking at that. Heather said, hi, everyone. So Heather, thanks so much for joining. And Annette says, does good credit make a difference in the rate? So Annette, yes, it does make a difference in the interest rate. It makes a big difference in the interest rate. So as I was talking about the client that we locked in at 6.5%, she's the best one for me to give you guys, just kind of talk about throughout the show. When I kept saying for her file, it was 6.5%. That was based on her credit score, her loan balance, her property value, her property type, where she lives. All of those things come into account when determining what the interest rate is that you will receive. The higher the credit score, yes, you're going to get a better interest rate. But you could have a fantastic credit score and you could be looking at a condominium, and you could have a little bit lower credit score and be looking at a single family home, and we might be quoting out that interest rate exactly the same. So all of those things are part of the determining factor of what interest rate that you do get. Your property type, your credit score, your equity, whether it's the amount of down payment or on a refinance, how much equity is in the home, the amount of the loan, whether you're including property taxes and insurance in your monthly payment. So are you impounding or escrowing? So there are a lot of things that go into what is the interest rate that you will receive. But yes, the better the credit score, typically the better the interest rate. That is the direction that it will usually go. All right. So I don't see any other questions right now. So I do want to talk a little bit about purchase, and especially since Annette did bring that up, because I talked a lot about refinance and I told you guys, get the applications in, get them started, get the consultation, set up the appointment. Let's jump on the Google Meet. Let's determine where that number is that it needs to be for it to make sense for you. So now let's talk about a purchase. How do you make sure that you are getting the very best interest rate that you can on a purchase? So on a purchase, it is a little bit more difficult as far as being able to be patient and wait, right? So with the refinance, I'm saying, get your application in, depending on what interest rate it is that is going to be enough that it makes sense to do the deal, enough for you to get a nice amount of monthly savings. We can sit and we can be patient for as long as we want. You already own the home. The house isn't going anywhere. The mortgage you have isn't going anywhere. With a purchase, it is a little bit more difficult because obviously you can't plan when you find the right property. So you get yourself pre-approved. The typical, scenario is, you want to buy a house for whatever the reason is. You're relocating, you're pregnant, kids moved out, like whatever the reason is, trying to get into a new school system, having another baby, right? There's reasons that we want to upgrade, whatever they may be. So now you decide you want to buy a home, brand new first-time home buyer, or even somebody that is going to buy another, not a first-time investor. So you get the pre-approval done. You reach out, we get you pre-approved, we get you ready to go. Now you're watching the market and you're waiting for the right home for you to come to market. So you can't necessarily time it like, well, all right, I found the house I want, so now I'm just going to wait another 6 weeks before I lock in the interest rate. You can't really do that because typically a contract is going to have a 30-day close. Sometimes it's a 2-week close. Sometimes it's a 45-day close. Sometimes it's 60. It depends on the seller and the buyer. But whatever that time frame is that is in that contract, you need to close within. You can't close unless you lock in your interest rate. You need to lock in your interest rate at least 7 days before you can close on the property. So you have to give all of the federal requirements for disclosures, we need 7 business days to do that. So we've got to get you locked in within a timely manner when you are purchasing a home and you've gone under contract. However, we do not have to lock you in immediately. The fact that you go under contract and you're opening up escrow or opening up title, or you're talking to your attorney, depending on the state that you are in and who the closing agent is, you do not have to lock that interest rate day one. That is not necessary. You can lock that interest rate in on day 14, 15, 21, if it's a 30-day close, if you're getting where I'm going. So we need to talk about what rate you'd love to have. We need to talk about what is going on in the market and what is to come, right? So there are things that we already know are going to happen on particular days. We know unemployment reports are going to move the market, move the interest rates, move the stock market. We know that the tariffs, we know all kinds of things that get pushed out. We know yesterday and today was a huge movement in mortgage-backed securities because there were bond auctions, and we knew that bonds were going to be sold. That was something that was part of the, initiative of, getting rid of some of those. And we are slowing down on our notes and how much that we are selling. And the Fed has said they want to keep more on the books. They're going to do less sell-off, less runoff. However, we knew that those auctions were coming. And typically when we have those auctions, we know that we're going to have some down days. Interest rates are going to get a little bit higher on those days that those auctions happen. So we are going to talk about what is to come between now and what is the last day that we can lock you in at. And then we're going to talk about how we're going to be in touch day by day to decide if we need to hit that button or not. So there is a way for us to try to get you into the very best interest rate possible within your window if you are purchasing a home. Maybe you don't have the time like someone doing a refinance who can take all the time they want, but we can still try to do our very best to get you to the rate that you are hoping for. And I am very straightforward. I'm going to be honest with you guys. If you've ever talked with me, I do not lie, and I kind of call it how it is. I am not mean in any way. I promise I don't bite. But I am very honest. So if you come to me and you say, well, this is the interest rate that I want, and it is something that is never going to happen, I am going to be very truthful, very honest, and very straightforward with you and tell you there is just no way we are going to get there. So let's talk about maybe some other ways that we can get you to that interest rate, to get you to that payment that you are comfortable with. So again, it's all about knowing your loan officer, and it's about knowing where you need to be, and it's about us being in very tight communication and being able to lock you in the very best timing that we possibly can. So Jane jumps on. She says, hi, everyone. Thank you so much, Debbie, for your show. And Jane, thank you. I think this is the first time I've seen you get on. If this is the same Jane, we go way back. I've known Jane since elementary school. She said, I'm looking to buy when my lease is up at the end of September. When should I start my application process? If I go with a FHA, is there a maximum percentage allowed to put down? So I'm really curious, Jane, is this you? If this is the same Jane, we were very good friends, very, very good friends for a long time. Okay. So, so FHA, you can put down as much as you want. Minimum down payment percentage is 3.5% down. So you do have to put down at least 3.5%. You can put down as much as you want to. There are first-time buyer down payment assistance products that are available that can help gap the bridge if you are missing the 3.5%, if you don't have it. So that is something we can absolutely talk about to try to figure out, what is the best way to move forward. And she says, yes, it's me. Oh my God, I love that so much. Okay, big hugs to you. But yeah, and then we can figure out how to get you into the property. That's not a big deal. And then the other thing to keep in mind is timing. You said, when should I be applying for the application if you want to be moving by September? So I'm going to go back and read. I believe you said What'd she say? I'm looking to buy when my lease is up at the end of September. Okay, so your lease is up at the end of September. So that means that you actually need to be in escrow on a property by no later than the end of August. And that is if you want to move from where you live today into the new property with no time in between, not giving you any time at all to make the move, to maybe paint some walls or, do what you need to do with the new property before you get in there. So if you want to give yourself a little bit of time so that it's not end of August opening up the transaction to closing at the end of September, let's say that you wanted to close beginning of September, then you really need to be in escrow by the beginning of August. Now, it usually takes somebody about 2 or 3 months to find the property that they want. So if we want to be in escrow by really the beginning of August, then we need to be looking for homes in July, June, May. Well, it's already April the 9th. So I would say that you are nowhere outside of the time frame that you should be starting to look at getting pre-approved. You could really do it anytime now moving forward. A couple of things for somebody that's never owned a home before. If you close your loan any day at all in August, your very first mortgage payment will not be due until October 1st. So even if with rent, you're going to make your rent payment September 1st, and then you're out at the end of September. So let's say that we close the loan at the beginning of September. You have all of September while you still have where you live and your new property to get yourself moved. And then you're still not going to make a new mortgage payment until October 1st. So you've got time and you could absolutely get started today. Now, the other thing with a pre-approval is many times we do the application, but there's things that we need to work on. So if you are concerned about your credit score or you're self-employed and you haven't filed taxes yet, this is a great time to be reaching out to us because we can talk to you about your income taxes. We can talk about what did you file last year? What do you need to show in your income this year in order to qualify? If we've got to do a little credit repair, we'll explain that. We'll talk about what steps that you can take to get that credit score up so that you are qualifying to be able to do that purchase. So it's really never too early for a consult. And for you, Jane, you're actually right within the mark. So you could do it anytime between really now and the end of this month. And then you're going to be right on schedule for being able to get yourself into your new place. So again, oh my God, I'm so excited. It's so cool to see you. Anybody else that has questions, again, this is an interactive show. I urge you guys to please put your questions into the feed. It lets me give you the information that you need. And if somebody is thinking something but not asking, somebody else has got the same exact question. So get brave, get out there, put your questions into the feed. Let me answer them for you. So bottom line of today's show is we had very, very low interest rates on Friday. They lasted about 6 hours is all we had. We could see that we were hitting, even once we got the rate sheets and we broke through levels, we could actually see that we were hitting the resistance. We were bouncing off of those levels and interest rates were going to go the wrong direction. We were able to get those that were already in the pipeline or had completed an application with us locked in. And we were only able to get to like 2 or 3 more people that were sitting on our desk as a list of people that were interested in taking advantage if an interest rate got to a certain place. So if you have been thinking about doing a refinance, if your mortgage rate is 7% or higher, you should be making an appointment to talk with us, get a consult, emailing me, however it is that you like to communicate. You should start that conversation and you should be talking to us. The other thing to keep in mind is with interest rates down, we have actually started to see the real estate side pick up as well. We've had quite a few more pre-approvals. We have seen quite a few more properties go under contract. We've opened up quite a few more escrows. As interest rates continue to come down, we are going to see the market start to get busier, which is going to create more competition. So you might see a home and 3 other people see a home. We're still very short on inventory. Inventory is getting better. We are getting more homes on the market than what we had for a very long time, but we are still very low in inventory as to what like a good standard number should be. So we are going to see a little bit more of that competition come as interest rates continue to come down. This is a perfect time, knowing that they are on the downward escalator, to find a property before things start to go nuts. Get in, get your home, watch interest rates drop further, and then refinance again. So Jane says, yay, I'll reach out to you very soon. Thank you. And you're very welcome. And thank you very much for watching. Again, if anybody has any questions, please don't hesitate, guys, talk to me. So my phone number, 844, wrong phone number, 844-935-3634. That is the toll-free number. Direct number, 661-349-8300. If this is the first time you've ever seen the show and you want to know when I go live, opt into the text messages to get the link to join. So you're going to text the word live, LIVE, to 844-935-3634. That same phone number is a phone number to call my office. That same phone number, if you want to get my tools app, you want to play with interest rates to figure out what interest rate do you need to get that payment to a comfortable level. You are going to text phone app, PHONE space APP. So phone app, same phone number, 844-935-3634. Go to the website, go to mortgagemomradio.com, send me a message, do the loan application, or schedule yourself an appointment to talk to me. I look forward to helping all of you very soon. I am so honored, obviously, that you guys are not mad at me right now because I have not been live in 3 weeks. You guys did get my text message. My uncle did pass away. He actually passed away on Wednesday, and then the following Wednesday was the funeral. I forgot to turn the messaging off, so you guys got the same message 2 weeks in a row. But I am typically here every single Wednesday at 1 p.m. Pacific time. If you guys want to know when I go live, you don't want to worry about YouTube sending you the notification, which a lot of times you won't get. Then again, text live, LIVE, to 844-935-3634. I would love it if you guys would give me a thumbs up. I would love it if you guys would subscribe to my channel. And I would love it if you guys would give me a review on my Facebook. I don't have any reviews on there. Everything went to Google, all my Google reviews. And Google has put me in jail. I changed the address and now they think it's fraud or something. So I've got to send in a bunch of paperwork to get out of jail. So right now, nobody can see my Google reviews. So anybody that likes the show, that listens to the show, that feels like I've educated them, I've helped you with a previous application, if we have talked before, I would love it if you guys would go to my Mortgage Mom Radio Facebook page and give me a review. With that, we're going to call it a day. I will be back here again next Wednesday at 1 p.m. Pacific time. Talk to you guys all real soon. Bye-bye.
Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's the mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.